Hello everyone, this is Sebastian McMahon from IA Financial Group and I'm back with the weekly economic review, this time for the week ending January 27th, 2023, so almost 1 month in the books already for the year. And when we look at the markets here, the close on a Thursday, so positive pretty much everywhere year to date, so a good start to the year for bonds. It's good to see that after it's only 1 month, but still to see some other color than red, because for the last 2 years it was negative and then negative. We still think as of January 27 that we'll have a positive year for fixed income for the bond indices in Canada. These are our expectations. This is a very strong start to the year, so we might have some volatility. And our fixed income management team, they are quite active. There will be some opportunities this year to add value as active managers, so you can count on IAIM to add value through the year, no matter what happens with the fixed income market. But so far, 6% for the long index, 3.5 for the universe index. Very strong start to the year. Equities, well, Canada is still outperforming, this time to the upside. You know, the S&P 500 is still in a bear market. It was down from the peak of January 2022 by more than 20%, so we're still in that bear market process. The TSX never plunged into a bear market in 2022, and it outperformed to the downside last year, so it pulled back less than the US, and now it's outperforming to the upside. So very good things here for the TSX, and we've been pretty vocal about that. Within equities, we think Canada ranks pretty high. It's cheap, and it has a win in its back for earnings. And so recently, we mentioned that over the last few weeks, but mentioning it again, we are still underweight equities on the net. So we think that especially in the US, this rebound here might be fragile. We see that the most shorted stocks are leading the way. We see that the meme stocks are making a comeback. We see that the most speculative areas of the text are getting bid again. So we think it's a low quality rebound, but we may always be wrong. So what we did, we went from a strong underweight on equities to a moderate underweight on equities, but we bought in Canada, we bought in Europe, we bought in emerging markets through China, and we sold off more than we did already in the US. So we're strongly underweight in the US, but neutral everywhere around the world. So this is how we're playing it, and we think the S&P 500 could retest the lows of October. So these are our views. This is how we're positioned. Right now, the NASDAQ has a strong start to the year. We think it might be fragile, but EFI, emerging markets, have posting some strong returns. So this is how we're positioned. Other markets, well, oil up on the year, down on the week. Canadian dollar, strong start to the year. Euro too, and the price of gold higher. We also added some gold into our portfolios a few weeks back, and we think there's some interesting prospects for gold for the rest of the year. Now, one topic on the week, Bank of Canada. Are we finally at the end of the tightening cycle? We think so. We think this is it. At 4.5, that was the last hike. There are risks that they do one more, turn of the screwdriver here. If we continue to have strong surprises in the labor market, so that would be a risk that they do more. But we think the base case scenario is that we're done here. Remember that in December in Canada we added over 100,000 jobs. The moving average is closer to 10,000, so that's 10 times the strength. And we also had a number like that was pretty strong in October. So if we continue to have that, which would be a surprise, but that could force the hand of the Bank of Canada. But we think that now it's time to stop, to assess the impact of this very steep curve that we've seen since early 2022 of tightening. So if we look at the forecasts from the Bank of Canada, their own forecasts, the table that you see here, I just want to bring your attention to 2023 Q4, the red box that's there. That's their forecast for inflation year over year at the end of 2023. So they think that by the end of the year we'll be at 2.6%, which technically is within the target range between 1 and 3%. So it's above 2, but but within the range. So at the end of the year, we could start seeing some conditions that would be ripe for a first rate cut. We still think, when we listen to their language and when we listen to their central banks, that it's important to not cut rates until they're confident that this will stay within the target range, that the job is done, this is sustainable. So likely we think they're gonna do the first cut in early 2024, but we could have a surprise that they hike before the end of the year. And the Bank of Canada is not, like the Fed, like the world central bank. So it's the credibility versus the markets might be less, of an issue versus the Fed. So they could, fly under the radar and cut by the end of 2023, but it's not our base case here. And a question I've been asked quite a bit this week is, well, when they start cutting, how fast will they cut, and down to which level should they cut? So how fast it will depend on where we are on the economic cycle, then the prospects for inflation. So it's hard to tell. Likely it's going to be slower than, the hiking trajectory. But importantly, if the job is done on inflation, then the bank should target to be at its neutral rate. And the neutral rate is, according to their estimates, between 2 and 3. So let's say 2.5. So maybe halfway back from where we started. So we started at 0.25, went up to 4.5. When they start cutting, it won't go back to 0. All right. So that's the very important part. It should go back to somewhere between 2 and 3, depending on the economic cycle. So just maybe halfway back. Just the message I wanted to send here. So Bank of Canada, now what's priced for the rest of the year? So on the left, the chart shows that, the market was giving about 85% odds that we would have a hike in January, and we got one, so the market was right. But now if you look at all of the other meetings all the way to June, well, the odds are pretty low. We're talking about 10-15% odds of another hike. So the market would be surprised if the bank went on with another hike. That could create some volatility. But on the right, the press release from the Bank of Canada says that, written publicly, they said that they are expecting to hold the policy rate at the current level while it assesses the impact of the cumulative interest rate increases. So the story I just told you, and they are prepared to increase. So if they do something, it's not going to be a cut; it's going to be another hike. So that's just to keep everyone on their toes here. So this is the message from the bank. So what to watch next week? We'll have in Canada the S&P Global Manufacturing PMI, so the state of the Canadian economy, an interesting indicator. Building permits in the US will have the confidence index from the conference board, should be going sideways at the depreciated level. The PMI, manufacturing PMI, very important index, should continue to slide to 48.1. So anything below 50 means that the US economy is in a contraction. So should continue to see that. The Fed rate decision, 25 basis points is expected. We're hearing, some very vocal, influential people saying that maybe it's a good time for the Fed to send a message to the markets that no, they're not going to be cutting rates in the second half of the year, which is behind some of the enthusiasm that we see here in the markets. And, how better to discipline the market than by raising by 50 basis points and, just setting your foot down and pounding the table. So it's not the base case, but we could have an interesting decision next week. Could lead to some volatility if we see that. So next Wednesday, 2 p.m. Eastern time is the time. And the jobs report, 185,000 jobs should be created, should be lower than what we've seen in previous months. So that wraps it up for the week. ia.ca/economy. You can always subscribe to the newsletter if you haven't done so. In Your Interest podcast, there's an episode every week. Economy, Finance 101. Some new material is being prepared, and social media, you can find us there. So always a pleasure to serve you, and I'll see you again next week.